I'm Clark Finney, Vice President and Director based here in Dallas, where I specialize in multifamily capital markets. This time last year, there was obviously a lot of unknowns. If you look at a graph of the last 3 years of the 10-year Treasury, in 22, you saw a massive tick upwards, and then very deep ebbs and troughs of volatility between 22 and 24. If your interest rate could ebb and flow 25 basis points in 90 days, that's a lot of risk. What's interesting about 2025 is that while, of course, there are peaks and troughs, the spread in those peaks and troughs are a lot tighter. Right now, what we're seeing is that in a 90-day period, there's a deviation of maybe 15 basis points, 10 basis points. And I think that gives investors confidence to be active in this market, even though there are still some unknowns out there. I think the only thing that's really keeping us from being in a truly stable market is tariffs. Where are we going to be with inflation? What does inflation have to do with employment? What does inflation and employment have to do with Fed rate cuts? What do Fed rate cuts have to do with the entire economy? Ultimately, if we can get past the hurdles of the tariff stuff that's going on right now, I think that you're going to see a lot more stability, and stability is really good. Right now, even though the market may still be difficult, it doesn't mean that there are not great deals to buy. I think that this is a generational opportunity for investors to get great basis deals. When markets are difficult to operate in, there are not a lot of players in the market. We're approaching maybe 1, possibly 2 Fed rate cuts between now and the end of the year. The next 6 months, you're looking at possibly 1, possibly 2 rate cuts. So we're talking 4 rate cuts over the next 12-month period. The time to be active in a difficult market is running out. More and more players are only going to be coming in. What we're doing often is positioning our investors to acquire assets with coupons that come with a lot of prepayment flexibility. So then you can both take advantage of this generational cost basis environment while also being in a position to refinance into a much lower rate to what we expect to be in a relatively short amount of time. We're talking even 24 months, possibly 36 months, to where then you can go in and refinance and recapitalize the asset to where you really want to be in a long-term position.